Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, August 26, 2010. It's 11:30 a.m. Eastern Daylight Time in the United States. In London, it's 4:30 p.m. In Mexico City, 10:30 a.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. We'll go right to our news. U.S. monthly unemployment claims for the month of, actually for the last week, dropped, more than people expected. People filing for first-time claims last week dropped 31,000, down to 473,000. This is the first decline in a month, according to the U.S. Labor Department. Economists had been expecting that the initial claims would drop to 490. In fact, they dropped all the way down to 473,000. The stock market is having a correlative effect. It's going up a little bit. New York Supreme Court Justice Richard Lowe has ordered a group of reinsurers to pay Travelers Insurance $262 million for a failure to pay a share of about $1 billion in asbestos-related settlement claims that a unit of the locally based carrier had agreed to 8 years ago. Under the ruling, Munich Re's American Re insurance unit will pay out about $202 million, while the Excess Casualty Reinsurance Association, that includes ACE, One Beacon, and Century Indemnity, will pay about $60 million. Interest could increase this whole outlay to about $420 million. Munich Re said that it's currently evaluating the ruling to assess which will form the substance of an appeal. The case stems from cover that USF&G, remember them down in Baltimore, wrote for California-based Western Asbestos after World War II. Western MacArthur, which was the successor company to the asbestos products distributor, sued USF&G in 1993 for product coverage. Western MacArthur received about $987 million in a settlement 9 years later. USF&G, after paying out, sued the reinsurers shortly after it became part of Travelers. It became part of Travelers after Travelers acquired the St. Paul Company in 2004. St. Paul had previously acquired USF&G. Losses have cut Lloyd's syndicate Chaucer by about 59%, their profit. They've made a pre-tax profit of £7 million for the first half of 2010. It's about 59% down on the £17 million it made in the same period last year. Chaucer's combined ratio jumped from 91% up to 105%. The company was hit by claims from the Chilean earthquake, the Deepwater Horizon oil explosion, the European winter storm Xynthia, among others. Chaucer expects that a combined net loss from Chile and Xynthia of £25 million. They expect about £16 million from the Deepwater Horizon and £1 million from the sinking of the Alban Pearl submersible and about £11 million from the Bangkok riots. The big news, actually, buried away there, they did have a 41% profit increase after all. Following a strategic review of its operations, Chaucer has decided to remain domiciled in the United Kingdom for the present. In particular, Chaucer expects to obtain a cash flow benefit from the recent introduction of equalization reserves and the UK government's decision to reduce the corporate tax rate to 24% beginning in April of 2011 from the 28% currently. So that's good news. Chartis is in the news. We didn't cover this story over the past few days because it didn't seem as if it had many insurance or reinsurance effects, but there was a tremendously bungled hostage operation in Manila over the past several days. Chartis is going to pay $128,600 each, 1 million Hong Kong dollars, to each of 4 families of the victims of the recent hijacking of a bus in Manila. The bus carried tourists from Hong Kong. Chartis is to make the payments on claims against travel insurance policies that the 4 victims had purchased prior to their trip. Chartis will also provide an unspecified number of survivors with up to $128,000 US in medical benefits during their stay in Manila and up to 100,000 Hong Kong dollars in follow-up treatment after their return to Hong Kong. We'll go to a word from our sponsors and come back with the rest of the news. Striking municipal workers in South Africa have ramped up the pressure now. Over 1 million people are expecting to participate in strikes that are going on right now in South Africa. Labor unions are planning the action as part of their continued pressure on the government to agree to improve pay terms and benefits. About 1.5 million state workers have been on strike since last week, picketing outside schools, hospitals, and government offices. A day after the strike began on Thursday, the strikes became violent. Police used rubber bullets and water cannons against teachers who threw stones and bricks at them when they were trying to enter a hospital in Johannesburg. The unions have set a deadline of September 2nd for the government to provide an 8.6% rise in salaries. It's unknown what's going to happen if they don't meet that, other than the fact that more state workers are expected to join the strikes. Well, this unfolding in Chile of this tragedy with the miners is something that gets everybody's attention. There are 33 miners trapped half a mile below ground. The other day, the rescuers finally managed to drill a 6-inch tunnel down to them. The miners are actually alive. The tunnel now is sending down air. They're able to send food down. They're indicating that the miners are in good spirits. It may take them as much as 4 months to get them out. When they get them out, can we go to the second picture if we haven't already? Bring that second picture up. This is an elevator rescue rig that was used in Pennsylvania several years ago when 9 miners were pulled up. Take a look at this. This is the width of this thing is about 90 centimeters. The escape tunnel is going to be about 26 inches wide. It's the diameter of a typical bicycle tire. It's going to stretch for about 2,200 feet through solid rock. The Chilean authorities are instructing the miners who are trapped half a mile under the ground without any lights to begin to exercise. They're putting them on a diet to make sure that their waistline does not exceed 35 inches. If their waistlines exceed 35 inches, they're not going to be able to fit in this contraption to begin the 2,200 foot ascent through the solid rock. Fortunately, they have 4 months to get ready. That's something. I hope they're not claustrophobic, but if they were claustrophobic, they wouldn't be in that job, right? Here's the hurricane report. Danielle looks like it's about ready to turn up a little bit, as you can see here. It's located about 1,000 kilometers northeast of the Leeward Islands. It's moving at about 26 kilometers an hour. Maximum sustained winds are about 95 miles an hour right now. It's a Category 2 on the Saffir-Simpson scale. It might brush by Bermuda, as you can see here. There's some concern about that, but as far as hitting the continental U.S., there's no concern. Here's the one that's causing some trouble. This is Earl, Tropical Storm Earl. It's about 1,100 miles west of the southernmost Cape Verde Islands. It's steaming toward the west-northwest at 26 kilometers an hour. Maximum sustained winds right now are only about 45 miles an hour, but additional strengthening is forecast over the next few days. And look at that track again. If this proceeds in the direction that it's heading in, at a minimum, it's going to wreak some havoc in the Caribbean. And depending upon where it makes its turn, it's either going to be looking at the East Coast or possibly come into the Gulf, where, as we've seen these things before, they steam right across the Caribbean and hit the Yucatan Peninsula. So all eyes will be on this one. No doubt Professor Gray out in Colorado is watching this one very carefully. Well, Egypt is having some power outages again. Here's a picture of Cairo. It didn't look like this last night. Of course, if we were to show you a picture of Cairo last night, you wouldn't have seen anything. It would have been dark. They had intermittent power cuts throughout the night last night, as well as during the daytime. The height of summer over there. Temperatures are in excess of 100 degrees. It's also Ramadan. Most of the population is fasting during the daytime. So they're fasting and they're sweating. There's no air conditioning. Most of the people don't have air conditioning anyway. Last week, an angry crowd surrounded a major highway south of the city and put up a barricade of burning tires. They're protesting government ministries, asking that the outages be restored. Egyptian officials say that the blackouts are necessary to protect the national grid from a collapse as a result of higher than usual consumption caused by a prolonged heat wave. Not a good situation. Well, here's the final story. The Canadian Underwriter magazine is a very respected journal. We look at it every day. Sometimes you read these stories and you spend so long in the tent of the reinsurers that you begin to look at these things and your eyes glaze over and they make perfect sense. But let's pull up this second picture. I want you to look at this man. You know who he is. What would his reaction be if he was reading this story? Let's go back to the National Underwriter, or the Canadian Underwriter. A webinar, which is a meeting held over the internet called State of the Global Reinsurance Market, a panel of experts put together by AM Best was held yesterday. And out of that meeting came the following. A $25 billion loss would stop the global reinsurance market's downward pricing trend, but an $82 billion loss is needed to turn the market. Brian Engel, an executive VP at Willis, suggested that, quote, should a Hurricane Andrew type event hit the Florida coast causing $25 billion in insured losses, we think that would stop the downward trend, but it wouldn't turn the soft market into a hard market. Brian Earhart, Aon Benfield's chairman of analytics and investment banking, Brian is never one to lack an opinion, said that the next major event will have to hit both insurers and reinsurers. He noted that a 115% combined loss ratio for the insurance industry was required in each of the three most recent market turns. He said to make 2009's 101% loss ratio into a 115% loss ratio, it would take an $82 billion hurricane, which is a 1 in 150-year event. It would take a $72 billion earthquake, which is roughly a 1 in 250-year event. Earhart went on to say that we do feel that some of the ingredients are there, but it's going to take a significant event to drive it. There's not going to be enough momentum from declining returns to turn the market. And finally, Chris Klein from Carpenter said that instead of focusing on the dollar sum needed to turn the market, the industry needs to think of a shock or surprise event that would affect the market. He pointed to 9/11 and to Hurricane Katrina. He said both were big losses for sure, but more importantly, both events exposed deficiencies in the way in which underwriters understood the accumulation of risks they had in their books. Klein said, I still remember talking to Bermuda reinsurers after Katrina, and they were scratching their heads trying to figure out how they had managed to lose a quarter of their surplus. Everything they said is true. It's true. The industry is one that covers risk. You don't cover risk for free. People pay premium for risk coverage. Premium is affected by events, not the least of which are mental perceptions of how much the risk costs. It's all true, but I wonder what Michael Moore would have thought if he was watching that webinar. It's very interesting, talking about the need to sustain an $82 billion loss in order to return the industry to profitability. That's all we have today. If we have any breaking news, we'll come back and tell